Welcome back to another deep dive. Today we're jumping into the real estate scene, specifically Genesee County, Michigan. We're looking at May 2025 data.
Yeah, we've got a bunch of reports, market analysis, and our goal today is really to pull out the key takeaways for you.
Right, help you figure out what's really happening beyond just the headlines, whether you're looking to buy, sell, or maybe you're just curious.
Exactly. It's about understanding the forces shaping things locally.
Okay, so let's unpack this. Because, well, on the surface, Genesee County still looks like a strong seller's market, a robust one, even. But when you dig a little deeper, there's some really interesting shifts going on.
Definitely.
So here's where it gets kind of fascinating. In May 2025, right, the median sold price for homes there, it went up 4.0% year over year, hit $206,575.
Okay, yeah, that sounds like a seller's market.
And this is the kicker. The median listing price, what people were asking initially, actually went down by 6.7% year over year to $195,000.
Ah, okay. So sold prices are up, but asking prices are down compared to last year. That's the divergence we need to explore.
Exactly. What does that tell us?
Well, it's really interesting. It's just sellers might be adjusting their expectations right out of the gate, maybe reacting to things like, higher interest rates.
Which were over 7% in April for Michigan generally.
Exactly. So maybe sellers are pricing a bit more cautiously to begin with, but, and this is key, the underlying buyer demand is still strong enough that the actual deals getting done are closing higher than last year.
So it's like a seller's market, but maybe a more sensitive one. Pricing strategy really matters.
Precisely. It's nuanced. You can't just throw any price out there anymore. And speaking of nuance, it's not like everything is flying off the shelves way over asking.
Right. I saw that stat in May. What was it? 43% of homes actually sold under their asking price.
Even though, 39% did sell over asking. So it's a split market in that sense.
Which means buyers are maybe getting a bit savvier or just more price conscious.
Could be both. It tells sellers, your presentation, your pricing it needs to be really spot on if you want to avoid those negotiations or price drops.
And we're seeing a little bit of that in the time on market too, aren't we? It nudged up slightly.
Yeah, just a bit. Average days on market hit 34 days. That's up 8.4% from a year ago.
So not a huge jump, but maybe things aren't quite as frantic as they were. Homes aren't necessarily gone in a single weekend unless they're, perfect.
Right. Which brings us to inventory. What's happening there?
Good question. Well, overall, homes for sale went up to 1,592 in May. That's an 8.4% increase just from the previous month, from April.
Okay, so more listings hitting the market. Is that across the board?
Pretty much. Most bedroom categories saw an increase, especially noticeable for the bigger homes, actually. 4 bedrooms were up 13.2% month over month.
Wow.
And 5-plus bedroom homes, up 19.5% month over month.
So for you as a buyer, that means, well, more choice. Especially if you're looking for a larger family home. That added supply might be playing into those pricing dynamics we talked about.
Definitely. Now, can we zoom in a bit? Because some specific segments are, well, they're kind of wild.
Okay, like what?
Check this out. 1-bedroom homes. The median sold price surged, up 43.9% year over year to $63,300.
44%. Whoa. Okay, what's driving that?
That's the question, right? Could be investors snapping up smaller, maybe more affordable rental properties. Or maybe first-time buyers targeting that entry-level point really fiercely.
Yeah, that's a huge jump. It suggests really strong demand in that specific niche. Meanwhile, what about the other end, the bigger homes?
Also strong, just not that dramatic. 5-plus bedroom homes saw their median sold price increase 11.2% year over year, hitting about $379,900.
Okay, so solid growth there, too. It really shows how different parts of the market can behave. Well, differently. Demand isn't just one single thing.
Absolutely. And that applies even more when you look city by city within Genesee County, right? These countywide averages, they can hide a lot.
Oh, totally. The hyper-local view is crucial. You see massive variations.
Like Lake Fenton. That stands out as the most expensive area. Median listing price was $777,000.
Right. Clearly a premium market there. And then on the other end,
you've got Flint. Most affordable median listing price, around $70,000. But look at the volume: 757 homes listed for sale, and 664 actually sold just in May.
Wow, so a very active, high-volume, accessible market there. Huge difference from Lake Fenton.
And then you get places that are moving super fast, like Montrose. Homes there sold in just 6 days on average in May.
6 days. That's incredibly quick.
Yeah, and their median sold price was up a healthy 10.1% year over year, too.
Okay, so speed and price growth there. What about Swartz Crete? I saw something interesting there.
Yeah, ZIP code 48473. Homes sold pretty fast, too, average 16 days, much quicker than the county average. But their median sale price was actually down 3.9% year over year.
Huh. So fast sales, but prices dipping slightly. See, that's the kind of local detail that really matters for you. It completely changes the picture depending on where you're looking.
It really does. County stats give you a baseline, but your actual experience buying or selling, it's going to be shaped by that specific street, that neighborhood.
So if we kind of pull back for the big picture again, Genesee County still definitely leans towards sellers, but it's maturing maybe, getting more complex.
Yeah, the inventory bump, those pricing nuances we discussed.
Yeah.
It means sellers really need to be strategic.
And for you as a buyer, well, you might actually find a bit more room to negotiate, more options to choose from than, say, a year ago. It's not quite the frenzy it was.
Okay, so final thought for you, our listener, to kind of mull over. Given all these twists and turns, the huge jump in one-bed prices, the different speeds things sell at in towns right next to each other, how could you use this deeper understanding? How might you leverage these details to, spot a unique opportunity or maybe avoid a potential pitfall in your own real estate plans?